Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today is the 22nd of March 2019, so welcome everyone. Welcome to this Friday's afternoon session where we're gonna have a very quick look at the markets, what's happening right now. Look at some of the previously discussed pairs and instruments, and we'll have a look at that. And before we do that, as always, let's have a quick read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. There's always a few seconds for you to read the rest, and we can continue. Okay, so now then, guys, let's quickly jump into the charts. Now the first one I want to touch on here is the CAC40. So you don't probably look at this index very often, but to be honest, we're always looking for some opportunities everywhere, and I was talking about this index this week as well in one of my videos. So basically I was telling you guys to keep a close eye on this rising channel formation that today is getting broken to the downside here. Of course, the big question here, where this is going to end. Is it going to end lower below this rising channel formation, or actually is it going to get back up inside it and continue kind of trading within this formation? But looking at this picture, of course, at the moment it seems that that could not be the case. We could see close lower here, and to be honest, this creates this negative atmosphere here around the CAC40, and we could see further declines. You can see that also this index is now trading below its key area of support near the 5,315 level, but of course the day is not finished yet. Let's see where it's going to end the day. We might see maybe a strong comeback before the close, but again, judging from the picture that we're seeing right now, this is looking more bearish than bullish. And to be honest, if this is going to stay here, if this is going to remain below this, not only below this the lower side of the rising channel, but also below the 5,315 level, well, to be honest, this is where we will brace ourselves, and we could then see a further move lower towards the 5,265 area, or even the 5,240, which previously also acted as a good area of support and resistance. So good potential area here. But for now, all eyes are on this. All eyes are on today's close. But if it remains like this, then yep, further declines could be possible next week. So keep your eyes on this one, guys. The US equity markets are also slightly in the red. Let me just confirm that. Yes, they are slightly in the red right now. So let's see how those are going to close, and yep, we'll just take it from next week and see what's going to happen with this index further down the week. Let's jump into one of the pairs, one of the interesting pairs for today especially, and that's the USD Turkish lira. So the US Turkey conflict, and the political conflict, let's put it that way, continues. So of course this has raised some concerns here about the Turkish lira again. So you can see that the Turkish lira has devalued again, once again strongly devalued against its US counterpart, and managed to travel higher, breaking some of its key resistance areas. So the first one that it broke through was the 5.515 area, approximately there. Previously that acted as a good area of resistance here, but you can see that it continued to travel higher, even managed to break above this little area here around the 5.50 456 zone approximately there. But what's interesting here is that it found good resistance for now. Of course, it found good resistance near the 5.631 zone, or should I say even 5.6315 area approximately there. Now, just to kind of show you what that level was here in the past, if we need to scroll back here and go back towards it was the high of the 31st of October 2018. So slightly above that, we do have another good potential area of resistance near the 5.6505, which is approximately near the highs of the 1st of November last year. So that's why, guys, of course, keep your eyes on those. You can see that it got held here near this high of October 31st. You can see that now it's kind of sliding a little bit lower. It's well above its R3 as well. So in a way, if this continues to slide, the first area that we're going to be keeping a close eye on is this R3, today's R3, which is around the 5.5716 zone, something like that, approximately there. Keep your eyes on this one, because we could see maybe this one traveling lower, hitting this, and then reversing back to the upside. Again, that's also keep on monitoring the political situation, what's happening with the negotiation, not the negotiations, but in general what's happening between the two countries. So basically this pair is going to be very headline driven, and we might see further acceleration to the upside if we see a break above the 5.6315 level that I was talking about previously. So basically this high, this October 31st high of 2018. So that's why, guys, the next potential area here, of course, if this starts breaking all these two levels that I've just recently mentioned, we could then potentially target the high that we saw here back on the 2nd of January, that this spike here around the 5.73 zone, 74, something like that. Yep, it will be very interesting to see if it actually manages to reach that. But again, before we can consider these higher areas, or especially this 5.74, let's round it up, 5.74 level, we need to see a good break above these two levels here, first being the October 31st and then the November 1st levels. Jumping into Turkish lira against the Japanese yen, certainly you can see that the weakness, but this is basically I wanted to quickly show you, this is the idea that we've posted today here on TradingView, a very quick idea, and at the moment it seems to be working out. So you can see that it's currently traveling lower. Now what's interesting here is, just let me quickly show you this. Basically, it continues to travel. The level that we've got in mind here is this key area of support near the 19.45 level, which previously you can see that here back on the 14th of January and basically around the beginning of around the first days of January, it acted as a good area of support. And you can see that this is the level that we're keeping a close eye on. It's certainly for now it seems to be traveling towards that area. Still has some room here, so before reaching it, yep, still we're still keeping to this idea. We could see a retest of this key area of support, and then we'll take it from there, because either we're going to see a nice rebound here, or maybe this continues to break further down, and then we'll have to just go and search some lower support areas. But for now I'm just going to keep it short and simple. The 19.45 level, that's the first one that we're keeping a close eye on. Jumping into euro dollar now. Euro dollar, of course, also taking center stage today, because of course this morning when I was talking about this one, I was telling you guys to keep a close eye on the 113.85 level, because a nice good push above that could potentially lead towards higher areas. But then we did get the German manufacturing PMIs, which came out very bad, worse than expected, and to be honest, the levels, those levels have last time been seen about 7 years ago. So Basically, that's very bad news for Germany, and this, you can see, this is the reaction that we saw here on the in the euro dollar. The euro dollar sold off, but found good support near this 112.90 level. Now, I was also talking about this level today, this morning. Basically, I was telling you guys, in case we see a drop below the 113.50 level, this is the next potential target for us, the 112.90, and you can see that this is where the pair is currently stuck at. If this continues to break the 112.90 level, if it continues to travel south, the next target for us is the 112.75. But to be honest, also what you could look at here is the area between the S2 and the S3, between those between the two, today's S2 and S3, which is approximately around the 112.45 level. So keep your eyes on that one. This, of course, this level coincides here with the high of the 8th of March. But again, for now, in order to kind of consider this area, the 112.45, and actually let me just quickly put that on the chart, and I do apologize for the amount of lines here on my chart, but still, nevertheless, let's mark that one. So basically, guys, keep your eyes on this one. The 112.45 could be a good potential target for today. Of course, only if we see a initial drop in below the 112.90, and then we can see that the 112.75 doesn't hold, and yep, the 112.45 is going to be our next target, next support target. But again, for now, in terms of the upside, well, it would be a bit difficult to talk about the upside here, but for us, let's say we would like to see this one traveling at least back towards back above the 200 EMA here, which is around the 113.40 level, and only then we'll maybe then we'll consider higher areas again. But for now, this is what the situation is. It seems to me more bearish than bullish. GBPCAD, also, I was talking about this one this morning. I was telling you guys to keep a close eye on this one. Basically, if we see this one traveling back above this upside support line, this short-term upside support line, then yes, of course, this could increase the chances for the GBPCAD to travel further up here. But again, I was saying here, we need to see a nice, good, clear break, and we need to see this one staying above the 176.75 level, approximately there, which also coincides here with the R2, and only then we will target higher areas like the 177.75 or even higher. But you can see that we did have a perfect test here, a perfect touch of the R2. Of course, now it's slightly retracing back down. The big question here, will this stay above this upside support line today, or is it actually going to drop back down again and push lower? So that's why for now it's better to observe this one. But once we see a good push above the 176.75 level, then yep, this could increase the chances of this one to traveling further up here. Now, the only thing is, don't forget as well that if we see a nice good push above the 176.75 level today, now I doubt that we could see a further move here toward the 177.75 today. Maybe this is something for next week in that case. So basically, because it's already quite extended here to the upside, so that's why even if we're going to see a nice push above the 176.75 level today, then yep, we don't expect this one to kind of, let's say, travel very much to the upside here, because like I said, it is already quite extended here from the very short-term perspective, extended to the upside, of course. So in a way, what could happen potentially, of course, this is just an idea, guys, it could kind of remain here, trading here, maybe just slightly below the this upside support line, and maybe leave this upside move for next week. And then of course, if next week, if it starts breaking this level, the 176.75 level, then yep, we could target the 177.75 or even higher. In terms of the downside, well, I mean, for us here, we would like to take a more conservative approach and wait until this gets back below the 175 level, and only then aim for lower areas. But then again, for even a better confirmation, this break here below the 174.30 level could be that trigger point for further declines, and this is where we will aim for much lower areas. So that's why, guys, for now, certainly this is looking more bullish than bearish, but again, this is, don't forget that this pair includes the pound, which is very news driven and headline driven, so that's why anything could happen with this pair. But for now, at this point in time, this is the situation that I've discussed. This is how it's looking and shaping up to be. And the last pair, very quickly, I wanted to talk about this is the USDJPY. Also talked about this one this morning. We were trading around here, slightly below the 110.90 level. And I was telling you guys, if of course this travels above the 110.90, then yes, it could continue pushing further up here. But if you can see that it failed to travel higher, but it dropped below the 110.63, which I've mentioned as well. And this of course continued to push lower, continued to even dropping below the 110.43, and today and right now we're already testing the psychological 110 level. Of course, the big question here is where this is going to end the week. That's going to be very interesting to see where it's going to where the daily candle of Friday is going to close. But of course, for now guys, it's going to be very interesting if it actually manages to travel further down. If we do get a break below the 110 level, then yep, that's wonderful. We could see a further decline here toward maybe the 109.50, but to be honest, I doubt that even if, let's say, today we're going to drop below the 110 level, that we're going to move all the way here towards the 109.50, because we are already quite extended here to the downside. There aren't many like big news, let's say, that could actually drive this one further down. It could create this strong yen buying again. So that's why, even like I said, if we're going to see a drop below the 110, the 109, of course, the next target for us is the 109.50, but it might end up maybe ending up somewhere like around the 109.70 level or something like that, and then maybe reversing back to the upside for just a little small correction. For us here to, let's say, consider higher areas again, to be honest, now given the current situation, we would like to see maybe this one traveling back above the 110.43-45 zone, approximately there, and only then we will target, initially we will target, of course, this 110.90, but the main one for us is going to be this 200 EMA, shown here as the black line. And basically, if we do see a move back above the 200 EMA, then yep, we will aim for higher areas again. But for now it seems that to be that the upside could be slightly off the table. Okay, guys, I hope you found it useful. Thank you very much for watching and listening, and for those who are finished for today already, so I hope you have a wonderful weekend. For those who are still going to be trading, so be very careful, be very cautious. And just to want to quickly remind you that on Monday there won't be any Traders Espresso or tea time. We will resume back on Tuesday, and yep, so it's going to be so it's only going to be then when we're going to resume with the video. So yep, guys, I'll see you on Tuesday, and stay safe. Bye bye.